Good morning, traders. Welcome to Tuesday of this beautiful week. Make sure to swing over to ssftg.com/brief to grab your morning brief levels. Before we jump on in, we always need to check the news, see what's going on, so that we know what's going on, when it's going on, etc. Looking at the news calendar, we do have one large news announcement today. Hey, it wasn't all saved for Wednesday, I guess. At 6 o'clock, we have the NFIB Small Business Optimism numbers. It's a small announcement. At 7 o'clock, the large announcement, EIA Short-Term Energy Outlook. That's going to be a big one. And crude oil and the energy markets, they've just been going crazy. So anything to do with EIA, anything right now, is definitely a market mover. 8:55, we've got some small announcements. And then one that's ranked as a medium announcement, but if you're an agricultural trader, you'll know that that's not the case. That's the WASDE report that comes out at 12 o'clock. If you trade ags and in any way, shape, or form, 12 o'clock today is a big day. The WASDE report is a huge report for the agricultural side of things. Later this afternoon, it is Tuesday, so we've got our 16:30 API weekly crude oil stock numbers, and then at 18:05, FOMC member Kaplan is speaking. But that's about it. So from the news calendar, relatively calm from the majority of the perspective, because realistically the WASD report's not going to affect anything but the ags. So the only thing we really have to worry about is EIA, which is oil stuff. We've got WASDE, which is ag stuff. There's nothing that really is set to impact the US markets. So with that out of the way, now we can jump into some charts for today being 3/9 of 2021. First up, we've got the NASDAQ, which is still continuing in this wedge, but the big thing that's standing out is that buyers are massively defensive on these lows. Every time it comes anywhere near this bottom, it gets ripped straight back to the upside. And even with this real big pile driver of a move down, stopped it dead in its tracks and shot it back the other way. So that tells us something, because sellers will have tried to continue selling that move down. I mean, let's be realistic here. This drive lower, that was the measured move completion. So if they weren't paying attention, maybe that wasn't the best spot. But a lot of sellers will be selling here, looking for another leg down. And they got dumpstered as soon as they got in. So you've got that first attempt down, the second attempt down. Very typically, there's a third attempt down. So we haven't had that yet, and that's usually where you're going to start seeing, from the bullish perspective at least, those L3, L4s, those deeper pullbacks, and it lines up almost perfectly with the bottom of the wedge and the earlier broken L1 and larger L5 for the upside. As the market gets back towards the highs, we then start running into the wedge top. I do have it marked not paying attention to that middle high for the same reason we were talking about yesterday. I'm going from this high to this high, not really paying attention to that one to see what the response is to this area first as the wedge high, because that's realistically what makes the most sense. Then next up, we've got the S&P with an ascending wedge working out nicely to the upside. Buyers are still showing that they're looking to kind of skip off the base, but at the same time, these highs are still showing divergence. We're running into a bit of a problem. The gap higher, that funky gap, was at least kind of recouped with a new high before it backed off again. So realistically, we could take this wedge top and, again, disregarding that inside swing and going to the next high, that would give us the larger potential wedge. Now, from that point, then really the only other wedge we have to work with would be like this, and it doesn't really fit. So I like this lower side, but the top side, it's still a little bit open. Not quite sure where that wants to go yet. Reasonably speaking, if it is going to dip a little bit lower, maybe they go down to a megaphone. But outside of that, from a structural perspective, that's all we've got. It's just kind of left everything behind with this giant rally higher. So buyers are looking to maintain this strength and holding these L1s, L2s. Right now, the L2's back at settlement. Well, better spot. And if that starts breaking lower, then the bottom of that megaphone would be next up. Next up, take a look at gold, and overall still continuing the bear descending wedge, but starting to slow down a bit more. We still have a lot of that divergence at the lows, but the big thing that's going on here is that it continues to make new lows, but after it makes those new lows, it very quickly retreats away from them. Same thing happened back here, same thing back in here, back there. back here. So every time the market even comes down to a new low, it very quickly jumps away from it. That would demonstrate a lot of bullish potential here. And if we look at the overall market volume on this drive lower, we can further gauge what kind of volume is coming in, including this most recent rally higher here. Let's see, let me bump this to, oh, never mind. Wow, the big zone of interest, there's a lot of volume that's trading here, but realistically, there's one very obvious thing that got left behind. There is a huge VVP that's just waiting over the past multiple days and hovering in this zone, and currently the market is right there backfilling it at this very second. So long as we're staying underneath this area, realistically, sellers are still technically in charge. But if the market starts breaking above this, sure, we've got resistance at 1713, but outside of that, that's the big VVP, and if the market's going to hold above, then what better spot to continue that reversal move back higher? There's a lot of interest going on here. It's a big teeter-totter, and the volume is really showing that that huge balance point around 1701, 1702. Then we've got crude oil with a nice failure back down inside of the larger megaphone, and it does look and appear as though this is definitely a much more confirmed megaphone. We also have the overall trap on the lows, which is looking very strong down at the base right there. That would have dipped underneath the bottom, trapped a ton of people out of the move, and then immediately starts screaming the market back to the upside. There's an obvious amount of interest here looking for continuation back up, and it's just a matter of seeing whether or not the bulls want to follow through and keep this going. So far, this appears as though this is the beginning of maybe a W bottom, which would be a higher low and a continuation back up. What better spot than the L2? The only thing that's a little bit of a bummer, and the thing that I wish was coming in a little bit better, was structure. We don't really have any. The only structure's down here. Now, if it wants to wait until 3 a.m., and then hit it, sure, that's fine. But, until then, we really don't have a ton to work with. We do also have this kind of smaller intermediary low, which might be the start of something if it wants to give a narrower pullback. But honestly, I would still rather see it kind of bounce off of it for a little while until it gets to that major point of interest. So it feels like it's a bit early. We've got to dip a little bit lower, hit the structure, then that will change the sentiment. Then over on the euro, we've got that descending wedge that finally, eventually, successfully found a low. Successfully is a little bit of a rough term there, given how gross that was at the bottom. But, well, I mean, I guess realistically, they did successfully rotate off the lows. Sellers are still going to be looking for a better price to enter, but realistically, no sellers really wanted to enter this far down. It's just so far down. It wasn't breaking away from the wedge, and if it did, it immediately snapped back. There just wasn't really a good enough reason for sellers to come in. This is the first retrace, the first relief that they've actually had to allow another potential move back in. So the next question is, the last time we saw something like this, it ended up being a V bottom. So is this going to be another one of those scenarios where it V bottoms out of here, we get back above 1.2, and this is nothing more than a massive zone of accumulation underneath a major psychological level of 1.2, and we don't come back again through 2021. There's a lot of things that can happen here, especially with this big rally higher. There weren't really any sellers on the lower side of things, which is a bit of a concern given the aggression down. You would have expected to see something, and it just kind of ripped right through it. So the next zone of interest is going to be the L2 to the downside. Very nice spot back at the top of the wedge. The market overshot the lows a little bit, so maybe a little bit of an overshot on the highs would be necessary, but right at the top lines up very nicely with a lot of other things. Then over on Bitcoin, we've got a continuation of the bullish channel, which just keeps grinding its way up. The big difference here, though, is that we finally broke above some of these previous major swings. The big question was, is this a lower low, lower high transition? In the shorter term, it definitely was. But in the longer term, it just made it underneath that low. Tried, failed, and failed. A lot of sellers got out of the way, and it started rotating back to the upside. And with that rotation higher, there could be a narrower channel, which is kind of in play right now, and that might be why we're seeing a bit of this gross price action at the top. But realistically, the other big thing is that they finally broke above the previous high, and they didn't just above the previous high. There wasn't just a little wick above the top. They broke the previous high. That's a great sign for continuation. So buyers are going to be looking for more movement to the upside and looking for the next dip back towards support on the L1, which is also the negative half DP, sitting at around the 52,500 zone for more continuation back up. The same thing goes here that we were kind of talking about before, where we don't really have structure. So it's a nice location and everything, but structure is the only thing that's missing. Channel lows in the intermediary might be all right. Otherwise, the wider channel's a little bit lower, and that might require an L2 pullback instead. And then finally over on Ethereum with a fairly good continuation move to the upside and more movement just breaking above the top, getting through that 1750, getting through all of that stuff that's been in the way. Now that we're breaking back above, well, we ran directly into the top of the wedge. So the important thing here is that they were able to crack back above the 1750s. That's a great sign. But now that we've broken above, we've hit the top of the channel, it just is a little bit more likely that we're probably going to see a bit of sideways action, maybe a little bit more up, but inevitably a larger pullback is going to be a lot nicer. That's going to allow buyers to regain interest back in the 1750s, back at the L1 for more continuation. And if you look in the nearer term, we've got this small little dash line. That's the kind of narrower channel. If we can get a break down to the lows of that channel or even slightly underneath it into that 1750, that'd be a really, really nice zone for buyers to try to kick this right back up again. Alrighty, well that's going to do it for today. Like we always say, stay safe out there, keep those stops in play, and let the winners run. Until the next time, we'll see y'all then. Thanks.